Something very strange happened for Bitcoin in the last days. I like to look at on-chain metrics. I like to look at what are the long-term holders doing for Bitcoin, because when they tend to sell, prices tend to peak. What we saw recently was a sudden unexpected spike in that metric, and the spike might not be over. Is this the reason to sell? Let's have a look. So check this out. This is the value days destroyed multiple in Bitcoin. This is an on-chain indicator looking at all Bitcoin, checking out what are the long-term holders doing. When the long-term holders are suddenly moving their Bitcoin, the long-term holders that normally are dormant, when they suddenly move their Bitcoin, what we tend to see is at least a temporary dip. Sometimes we see how the bull market slows down. Sometimes we see how we are crashing and entering a bear market. But in general, it's very bad to see the value days destroyed multiple going up. And we saw this recently peaking again. That was at 72,000. And that was also a reason why I sold some of my Bitcoin. But have a look at this. Have a look at what happened over here. We suddenly saw this spiking up again, even though the price didn't really move much, because historically what happens is the long-term holders tend to only sell when we are making new all-time highs. They're not just selling randomly when we are going sideways, right? This is when usually the long-term holders aren't moving their Bitcoin. So what happened over here? Why did this suddenly spike up? Is this a reason to potentially sell? The answer is over here. There had been movements of the Mt. Gox coins, internal wallet management movements, and it wasn't all coins that had been moved. It was only roughly 1/3 of the coins. 1/3 of movements already create such a spike in the value days destroyed. If all of the coins had moved, we'd see a massive all-time high over here. And this can give us somewhat of a flavor of what kind of impact the Mt. Gox selling can actually have on the price. We first had to worry about the Grayscale Bitcoin Trust, about GBTC. That Grayscale Bitcoin Trust got sold off, and some of the Bitcoin found itself back into the new cheaper ETFs. Now the sell pressure from the Grayscale Bitcoin Trust is over, but now we've got the next looming Damocles sword, and that is the Mt. Gox supply. So in case you're new to all of this, right? Mt. Gox was the very first centralized exchange of Bitcoin. One could buy Bitcoin via fiat, but it was a very amateurish platform. It didn't have a lot of security. It got hacked. All the funds were pretty much drained, but some of the funds could be recovered. So Mt. Gox completely shut its doors. Some of the coins had been recovered, but the coins haven't yet been returned to the actual holders. And so those holders are now in massive paper profits. And when that supply actually hits the market, this will be very similar, if not more impactful, compared to long-term holders selling. Just 1/3 moves over here, creates quite a spike in the VDD. Now the price hasn't been impacted by this movement because, again, this was only internal. This is not yet being sent to the actual owners. This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out. So there is some risk at some point that the price gets depressed by that supply. But how much potential upside is there? Let's compare the long-term holder developments for prior bull run. How did they buy and sell? How much buying and selling is there currently with that recent rally? Are we already very heated? I think parts of the answer is in this chart over here. What we're seeing here is the realized cap hodl waves, a 14-day moving average. And we see this spiking up very nicely whenever a bull market tends to be over. We are currently midway through that compared to prior peaks. We had once, though, turned around at the current level, and that was before the COVID crash. So we recovered from 3.5K all the way to 10K, then we crashed again down to 5K, and then came the massive bull run. Currently, we are at a very similar level in the realized cap. So that again shows there is some profit taking, but we are not yet at ultra heated levels. Here's one of my favorite models, the realized price. This is the average price that Bitcoin had ever been moved for. So when the current market price is above the realized price, the market in aggregate is in profit. The realized price is currently at 30K. So the market is more than 2x in profit. At some point, I do believe that the price, so the market price, will go below the realized price again. The question only is, how much more can the realized price rise until we hit that? Again, we are currently at 30K and we are sometimes below that realized price quite a bit, right? By roughly 30%. So that's a potential downside. I think the very worst case Bitcoin could ever go is to 20K roughly. That's the risk we are taking. Long-term holders tend to sell when they're in profit. They tend to sell into a bull market. And that's also what we see over here. Currently, there's pretty much no long-term holder in losses. And we can also see how, as a fraction of all of holdings, the long-term holders are declining. So this is distribution to short-term holders. This did dip more in prior bull runs, and we did see corrections like this in the past. But again, it's a nice measure to see where we are currently at. We are not hyper cheap. We are not hyper expensive. We are pretty much neutral. And so I don't believe that a lot of long-term holders will be selling at this point. Short-term holders might sell, and of course, the Mt. Gox supply might be sold at some point, but simply just the long-term holders that trade the cycles are unlikely to sell right now. There's also a specific measure for this. That's in this chart, the long-term holder sell-side risk ratio. When this is high, we have to be cautious. We have to potentially take profit. When this is low, we can buy the dip. And currently, this is not that high. We are definitely not at hyper elevated levels. So the long-term holders aren't selling too heavily. They have sold a bit, but they're not going to sell a lot in the next weeks, I believe. So this is now to a certain degree a bet on traditional finance continuing to buy Bitcoin via the ETF. In the last days, according to this chart, we did see slight inflows. So let's make this a bit less complex. Let's simplify the chart. Just look at the net flow. We were pretty much neutral in March of this year, but since beginning of May, most days are positive inflows. In other words, as a sum of all of the Bitcoin ETFs, including GBTC, we see traditional finance buying up Bitcoin. So let's have a look at this, right? The 2nd of May, that's when the inflow started, and have a look at the price development since the 2nd of May. Bitcoin is doing rather well. So overall, I believe the positive momentum is intact. A crash to 20K would be the absolute worst case, but currently everything seems healthy. There are more inflows, there is positive momentum, and so far we don't yet see any selling and any transfer from the Mt. Gox liquidators to the actual depositors. Once that transfer happens, then of course this will be a headwind for Bitcoin. Right now, that future selling doesn't matter, and it also seems to not be priced in any ways. If it's the first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Feel free to check it out. Link is down below.